let's take a step ahead and move on to the next segment, which is a bit more about what essentially, FinSire is, how did it start, what exactly does it do, and then finally we'll cover how do you see this kind of segment moving forward, right? So let's start with the basics. Why the name FinSire? What's the origin of the name?
Okay, so I'll probably go with, so there are two things, right? I'll probably go with the truth or the lie. The truth is, of course, the fact that we never actually got another domain name with FIN to begin with. So, what else do we have with FIN? And completed SIRE was the leftover. So he said, okay, fine, might as well take it. Obviously, what we make up and tell the world is essentially that, it's financial desires. That also makes sense of what we want to do. Is financial desires for a bunch of lenders, depositories, clients that who essentially can take this public asset data that is out there and kind of build on it. That's how the origins have gone.
Got it. Interesting. I think I'm probably hearing this. I've heard this a couple of times as well, right? Koi aur naam mil nahi raha tha. You took the domain and then you added the meaning afterwards, and then it suddenly makes a lot more sense, right? Yeah. I mean, in any way, I think if it makes sense, it's a great name to go with. And FinSire, financial desire, right? And what exactly you guys do kind of attaches a lot of meaning to the name as well. Having said that, right? What was the problem statement that you saw in India that you kind of are addressing with the business model that you're building?
Sure. So the problem statement and the whole thesis actually, like I said, is straightforward. We are like a technology company that believes that almost all the asset holding patterns or asset holding data should be provided with a click of a few buttons, which is basically through APIs, for anyone requesting it and with the consent of the asset holder, right? So, Shreyas, you might be holding, 8-9 different forms of assets, but today it's actually held with different repositories. It is held spread across, and you need to punch in a lot of OTPs at different places. And only if one is integrated with these places will you get the data. I mean, that's actually a pain, right? It's a huge pain to think of it itself because of the fact that it is your asset. And you are not allowed to, kind of pledge it, use it as collateral, or showcase this asset to anyone out there so easily.
True.
In India, there are 16 forms of assets that the retail holds. How many forms of assets can you transfer? Actually, little to none, right? You still need to go to the bank, give your hard asset of your land, a hard copy of your land, and pledge it and get it done. And the process actually is very cumbersome, painful. We're living in kind of with utmost digitization in terms of payment infrastructure. There's nothing like this for say lending infrastructure or asset holding infrastructure out there. Which is where I think it struck my head. And there's an interesting story. When I came back to India last year, I actually wanted to buy a second-hand car. Don't ask me why I wanted to buy a second-hand car. But essentially, while doing so, the company had asked me for some form of FD or some form of which I said no, I'm not going to give
security of such.
Yeah, some form of security, right? Like they said, okay, if you're not going to give an FD of sorts, then you'll have to kind of give some form of security. And I said, for buying a car, will I even put a land? Right? That's probably the ridiculous answers that one would actually have. So this is where I thought if I had some form of asset that essentially I could transfer or use it as a down payment or a collateral, which is say some mutual funds that I hold, that should be it to purchase even that particular car that I have.
Of course.
So transfer of assets, transfer of ownership is also supremely, a big blank space that is out there. Which is why we would solve one of these use cases as something like this.
No, definitely. I think this is a huge problem statement, right? Bearing a couple of assets like FD, I think there is a lot. I mean, there is hardly anything that a retail consumer can pledge. So how essentially are you solving for this? Like, what's the solution? What's the big idea?
And FD also is pretty painful, right? Because you have to put it, you deal with that particular lenders out there, and it's not tokenized itself, right? So FD actually takes a full form and it's actually tokenized. So how we do this is of course, whatever assets is built or digitized, we take it from the repository, take out the APIs, build the infrastructure and latch on to various entities out there who essentially needs the use case of that. So buying a car was a particular use case that I just mentioned. just taking a raw plain vanilla credit is another use case, and hopefully some form of cards that we give out to secured is another form of use case with various assets that are out there. The benefit of this overpass any other asset today, only because it's tokenized, right? Only because I can take your mutual fund out there, lean market to that lender in a very digitized way. Everything else either is a hard asset like land, vehicle or gold, which obviously has high OPEX, CAPEX, has low transparency out there. The possibility of the asset value of it will be a lot more than your purchase value. The possibility of it being fudged in the ecosystem is a lot more, right? Meaning gold purity varies, your land kind of, papers might be so on and so forth. Your vehicle RC book might be very different of sorts, you can fudge it and give it. The ability for a digital asset out there is that it cannot get fudged so easily. The OPEX is supremely low through APIs, and I can transfer the lien mark very easily. That means I can pledge, depledge very easily and give it out, right? That is needless to say that all hard assets also will eventually get digitized. I do believe that commercial real estate has a huge opportunity, warehouse has a huge opportunity, and it can obviously be uniquely tokenized and can be done, right? So what we do is that today, as FinSire, as we work with repositories and depositories directly, hoping to work with regulators directly. On one side of it, we obviously do have lenders where we can, kind of play around with various use cases, and we go attach our APIs out there or various other entities who need those use cases, right? And that we build various use cases around that, essentially to unlock the total asset capacity of anyone out there through infrastructure today.
Of course. No, I think that's a brilliant idea. And what does this mean for a retail consumer, like a layman, right? Or what does it mean for them? How does it change their life?
Oh, yeah, that's beautiful. I mean, actually, this is where it changes a lot of lives put together. Today, only the HNIs or the ultra rich in the country do get to pledge all of their assets very easily, right? Be the Adanis or the Ambani, and rightly so, because they do have a lot of backers working with them, so on and so forth. They get probably the best sort of interest rates, and they get to pledge almost all their assets. So they get to pledge their stock, so on and so forth very easily, and kind of get on it. Extend the credit for easily about 10, 20, 30 years, whatever is possible. We do know that, a lot of businessmen actually do this, and the interest rates are probably supremely low, right? So we play with, we build and focus around three main metrics. One is, of course, the interest rate. One is the which is your loan to value or LTV. The consumer wants high LTV only because of the fact that he or she has more capital in hand and can play around. The third one is the loan duration, which is supremely important, right? Loan duration means that I'm not forced to pay my EMI, say about 5,000 a month. Rather, I can do 3,000 a month with lower interest rate. So net
and a higher duration.
Exactly, and higher duration, right? So net is actually means the same for the consumer, right? Low interest rate, high duration, higher LTV essentially means that on a long-term horizon, I'll actually end up paying this more or less the same, which was with, say, low duration, high interest. Right? End of the day, making it a very fair play game for the retail consumers as well as for the ultra rich that are out there in the country. Right?
Of course, I think that's kind of bridging the gap and I would say creating financial equality, right? If I were to put it in a bit more romanticized term, I would probably call it just on the top of my head. I'm sorry, I forgot it. Yeah, bringing the power of leveraging to the masses, right? Leveraging your own assets and availing credit on it. I think that's indeed superb. But how would let's say, what impact would this have on penetration of financial services in India, like specifically credit? Let's talk credit as the initial use case. How do you see this impacting credit's penetration or lending's penetration in India?
Oh yeah, that's beautiful. Actually, let's talk about this, right? I usually tell that during all my conversations and kind of talks that I give in India, the ones who hold assets in general are actually 70 crores, right? Any form of asset. The ones
around
who
50%
use
of the population.
Exactly, right? The ones who use UPI are somewhere about 28-30 crores, right? The ones who have the total number of credit cards that are out there are somewhere about 7 crores or so, right? 7.5. So unique, and this spread across businesses, self-employed, and salaried. The ones who have unique credit cards out there, the ones who unique credit cards are somewhere about 3.5 to 3.5. Right. And when you see this gap, right? There's a huge gap there's out there. The ones who hold asset and the ones who can obviously repay don't get credit or credit cards out there supremely easy. So credit cards is just one of them. When they get the credit, they get a supremely high interest rate credit because they can't pledge their asset out there very easily, right? But they repay. India, till date, is it a problem of intent to repay, or is it a problem of not kind of having the money to repay? You'll actually see the first one, right? They do have the money to repay, and they will do whatever it takes to repay. Traditionally, a lot of Indians, when they have pledged their asset, which say your land or gold or so, always have repaid more often than not, right? So the intent actually increases when you have your asset being pledged, right? For Indians, and that's how you got to build, right? Yeah. Exactly, right? So that's how you got to build the gap out there. A lot of players for the last 4-5 years have done a lot of trial error method with respect to credit, right? Like BNPLs out there. They used to give a lot of kind of, BNPLs out there, do a trial and error method, and then realize, oh, geez, these set of people actually would, have not repaid. So let me just take them off the grid. And that has actually reduced the whole sample set of credit users in India. Okay? It has come back to square one of what we actually intended to do, right? So in India, the ones who actually repaid credit are actually very, very few. Right? So the intent of the psychological change is that, boss, if you have an asset, you get the better deal for yourself, right? You get a better deal for yourself, and ensure that this builds your credit score as well as builds the fact that you can kind of take credit across all sorts of platforms and which is what we're trying to do.
No, of course, I think that makes a lot of sense, and I think the potential for these kind of solutions to increase the credit penetration. So for example, you spoke about UPI, right? Only around 30 crore people use UPI and only 3% have credit cards per se. Like, if you look at this going forward, maybe a half a decade down the line, and these kind of a solution is in place, probably the 70 crore asset owners that you say could probably pledge that asset and get a credit card because of these kind of an infrastructure that allows easy pledging and depledging of assets. And you can see credit card penetration essentially shooting up, and probably the first credit instruments that will be the first formal credit instrument that will be issued to the underbanked or unbanked population would be the credit cards that will be secured using this kind of an infrastructure.
100%. The only drawback for existing, I mean, you can still do that in FD, but the only drawback is the fact that people actually have to put the capital whatever they have in for an FD.
Right.
But these same people are already, kind of building up their life insurance. These same people are already putting an SIP for mutual fund. So they would not, what are these assets actually doing? They're not doing anything but just, kind of sitting in the repository and kind of hatching eggs.
Exactly.
So essentially what it means that if it's just sitting out there, it can just be lien marked and we have the ability to repay. Of course, most of them do have that. They kind of just can transfer it very seamlessly and get a card.
Of course. So and I think, and I definitely think, I mean, when you talk about the credit card backed by FD, right? If you are, let's say, putting up a lakh of rupees and you're getting around 95,000 worth of credit limit, if I already had a lakh worth of limit, I mean, I'm talking about from a perspective of a common man, right? Not someone who's trying to get the best returns on their money, but just normal common man. I think he would probably use that lakh rupees instead of getting a credit card, right? He would directly outright use it. Why would you really want to put an FD and then get a card and then use it?
Exactly, right? Because you either riches are not getting great off credit cards as an instrument, you're not getting, kind of those solid offers that usually other credit cards do get on that secure card. So it doesn't make sense at all. Rather, you can actually use your other assets or use your other assets and then, kind of do that. Which is why I do believe there's a huge white space involved with this unique asset, right? If we ever have to kind of, get to the level where, credit card, kind of usage, say in Germany, 55%, in the US, 74%, in Canada, 84%. I mean, India's still at 4%. I mean, that's supremely low. How do you even get to the ones with ease?
Exactly.
Right? Something like this.
I think currently, majority of the financial services are tailored for the top 5 or 10% of Indians, and for the rest of them, it's kind of been, it's like the same mechanisms have been used to underwrite them, while they are a completely different type of people, have different kind of cash flows than what a person in the top 10 would have. So we are not accounting for that. We are not accounting for their financial behavior, and you're trying to put in those kind of legacy infrastructures on those people wherein it may not be applicable that way, right? But if you build something unique like these kind of a solutions, pair it with an alternative scoring model, and you probably have something that will get you another 40-50% of people onto credit.
100%. I do believe that the existing ones, which fairly have done a great job. Now it comes to a point where a person like me, who's now has a decent credit score, who's probably kind of as earning well, I would be targeted by at least 5 banks by a certain. I mean, there is whereas say my mom or my sisters who essentially have not taken credit or don't have a big credit score itself to begin with. How do they get it? Can they be a joint account holder with me with my mutual fund that I have, or that they have? Can they even get that? I mean, that's how we got to think of it. Credit to another big white space that India doesn't have is one to start off with is the working population of women, right? That's extremely low in India. When you don't work, you're not salaried per se, and when you're not salaried, you'll never probably get a credit. Right? So it's very, very hard to give a credit card out there if you're not salaried. Only the top salaried folks actually get a credit card out there, even in India. In those cases, the only opportunity for them is that joint account holder, or they have a life insurance out there, or they do an FD pack, right? And how many of them actually would do that with the latter? Not many. But if they have something like this, I can probably give it to them and ask them to kind of use it ASAP itself, right? Which is where I think of it, right? Women. And even women credit card holders are extremely low in India. The numbers actually says
agreed.
Like I think UPI holders are also extremely low in India.
True. I think you're on point. And I think most of these women have gold that can be pledged to kind of get a credit card, right?
Yes.
To use it, like you don't have to liquidate that gold in times of emergency, but you can also leverage it to use it in day-to-day basis and kind of pay it off as you earn that money back.
Exactly, right. So you can lean mark that as well as it operations.
Exactly.
Yeah, for sure.
Indeed, I think that is a really this is a really powerful solution that could impact the credit penetration and a lot of overall formal financial services penetration of India in the next few years if kind of leveraged correctly. Having said that, coming to the final question of this segment, how do you see this kind of entire credit segment and collateralized credit segment in India evolving, given how the emerging technologies are, playing a role now? You see AI becoming more and more mainstream, and I'm not talking about AI in the sense like Siri or Alexa, right? But serious stuff, right? Like OpenAI, GPT-4, and then there are AutoGPT and a few other things that are coming in. And I think blockchain has been around forever, but we haven't seen any use cases on that yet. So how do you see those kind of technologies playing a role? What are your views?
I still do believe that, while the whole notion of crypto fad had taken off and has obviously kind of, kicked the bucket and lost the trust of a lot of millions of people.
True.
I do believe blockchain has a fairly decent white space involved in it. And I'm saying this only because of I come from a core tech background, right? Like, and the understanding of blockchain is actually very deep for us, for myself as well as for my teammates out there. And the reason is that something like what we are building today, if accepted by all regulators, lenders, and consumers, and if it's easy, blockchain actually builds a very good use case for something like this. The reason is that now today we are in not building on blockchain because it's not being accepted by these regulators. People had actually built a very similar company in blockchain space for something like this because he had seen that he didn't get through at it. We realized first we had to kind of move it. Why it actually builds a very good use case is that now for getting all of your assets, I don't need to go to different repositories, right? I can just get all of your assets in one particular node and map it on that particular node and eventually give it out there. It actually takes off all the pain and effort that speaking to different sorts of repositories, convincing them, and doing that. I do believe it would eventually get there, provided if all of them are on the same boat. If not, it has to be done in the current system that as we're building.
Agreed. No, I think these technologies will definitely play a major role, and especially blockchain, right? it has been overly stigmatized in India and many other countries, mainly because of the fact that it got a lot of people scammed in the crypto fads and in the crypto boom and the crash and the the blatant manipulation of few tokens like Dogecoin and a few other, and a lot of people kind of get swept up into it when they kind of wanted to make a quick buck. But keeping all of those things aside, right, if you see the underlying technology, blockchain, I think it has been around since over 30 years, and it's a really a beautiful way to operate in an environment where you don't need any trust. And basically a model like yours, wherein you would kind of want all of these assets and would want basically the status of these assets, right? Like whether they are pledged or not pledged, and what all of that to be uploaded without any fraudulent means. I think that is essentially where these kind of technologies would play a really good role.
For sure.
Hopefully we see these kind of technologies being pulled back into the mainstream in the next couple of years. I've seen a few startups working on these technologies without actually naming the technology, just saying we are using servers or whatever it is, but actually they're using blockchain technologies. The only reason they're not saying it out loud is because then it creates a stigma in the minds of the investors as well as the regulator, right?
For sure. I mean, that's the only problem out there. I do believe that so the whole crypto fad that we saw was actually pure capitalistic kind of, evil capitalism that we actually saw. But the true socialism plus capitalism that we'll actually would see come out is actually what true blockchain kind of has to offer.
Exactly.
Right? The ability that it has to provide, to put all of them on the same table, the extra commissions that people take, albeit gas fees are pretty high today, but over a period of time, they are meant to come low. And the ability to kind of, have the control of your own data very seamlessly rather than a repository only. I think that itself suggests that, it does have some gas still left. And eventually, if not this, something or the other in terms of infrastructure, public infrastructure would be built on blockchain and would be suppressed.
No, definitely. I think it will make a lot of sense. Probably it'll take a couple of years to destigmatize, and I think then we'll see those use cases kind of popping up again, talking about all these technologies out in the open.
For sure.
Having said that, I think Shreyans, this was a really interesting session. Got to learn a lot about the entire emerging tech piece, as well as how collateralized lending and these kind of platformization of collateral, the technology on collateralization will kind of create a deeper impact and probably help boost penetration of financial services in India. Having said that, let's move to the final segment of this episode. It's called the rapid fire round. We'll probably have around 5 or 6 odd questions that I'd ask you, and you're expected to answer within 10 seconds. Sure. No brainstorming or no thinking aloud on that.
Sure.
All right. So let's start. What is your favorite book?
Oh, book, I read a lot. I just don't tell it, but I read a lot back in. I think Steve Jobs' Water Accent. I think that was one of the first book. You're right. I do believe Steve Jobs has done a lot more good than bad. And he's built his design thesis is a lot more kind of fruitful to what Apple is today. So I've learned a bunch of his thoughts, which is mentioned very clearly in the book. So I think that is a great book.
Awesome. So what time do you normally wake up?
Oh, I sleep for about 5-6 hours. I do wake up early. I wake up somewhere about 7:30. I do gym then. So I have.
Oh, awesome! I was expecting to hear 4:30. I mean, I've heard a lot of entrepreneurs, and I just thought it's a common practice for everyone to kind of wake up at 4:30.
No, it's like because I sleep also pretty late. I sleep at about 1, 2. I cycle. I start cycling at about 11. I finish it about at 1. So right now it's also because I'm prepping for a triathlon. So I do give in.
So how do you manage all of this? Triathlons, your gymming, your other sports, and as well as your business?
I mean, so these are the only things I got to do in life. So I don't think there's anything else that I do in life. So I mean, these are just probably my triathlon prep, gym, and a lot of work.
So dividing your time into 2 different buckets: fitness and work. That's it.
Yeah, I mean, I guess I think that's. I'm having fun in this space. I've been, like I said, I've been doing some form of fitness all through my life. I think this and work is what keeps me busy. I don't think I do anything.
Gotcha. So what's your guilty pleasure then?
Oh, guilty pleasure. lot of workout. I actually do a lot of workout a day. I think that's my. I don't think I have a guilty pleasure on eatables or something. But
Come on, it cannot be that.
I mean, that's the sad part. I don't know. I mean, I just enjoy. I do a lot of excessive workouts. I think that's a guilty pleasure. I do a lot of excessive workouts. There are days when I do about 4 or 5 hours also in different form of sports. So I think that's what keeps me going. I guess so. That should be the guilty pleasure. I don't think anything else is a guilty.
All right. Okay. I'll catch you offline on this. So,
Okay.
What is one thing that you regret not doing as a founder?
Oh, one thing, regret. Oh, yeah. So this is for sure, right? When the early days when we started, when the other repositories would not give out API so easily or would not, kind of agree to give it out to a non-lender, I actually curtailed my vision very small. And I said that, we could only do it for salary and so on. So people thought we were just very different out there. I think when you go out there, the idea should be to let out the whole story of the vision as much as possible and not curtail it to a certain sort of an asset.
True.
It's for anyone, right? Like, either be it the market, opportunity, be it the total, kind of asset value that you're building for, be it the, are you building it for India or world? Should be all, your whole story or the whole art should be represented the way you're actually thinking a few years down the line rather than, kind of telling it. I think that is a big regret. I felt that, I thought, saying what we are today would be what they want to hear. I don't think anyone wants to hear that. Everyone wants to hear the beautiful side of what you're going to be down the line, and that's why I'm going to kind of, support you, be with you, or, be in your journey. I think that's what I do regret. So I do believe that I do now openly tell that, this is what we are over a period of time. You see it probably, building as a large scale sort of a business around all assets, multi-assets repository with that. We start off as, because the regulators and the governments are obviously not, if we get an opportunity, we'll probably partner with them and actually do it. If not, we build it in private and eventually give it out to them.
Got it. So just to summarize, you probably, as you said, like you regret you regret curtailing that vision of yours when going out and talking to. Rather, if you would have actually spoken about the entire vision that you had rather than a few specific use cases, you think things could have been different?
I do believe so. I do believe because I would have been more expressive then, right? I would be more expressive in my own sort of, what I want to build for. When I curtailed it, I was not actually expressive. I used to actually think of or prepare for those points that I say for that asset. Now I do have an opportunity to be a lot more expressive because I'm very vocal about it, and which is what is there in my thoughts. I
think which is how it should be. Yeah.
Yeah. So I do believe that it should be very expressive and open from start.
Perfect. I think one final question. What is your favorite vacation destination, given the fact that you have lived in so many countries?
Okay. Vacation. I don't know if I like vacations per se, but yeah, I mean, I've lived across a bunch of places for sure. I do believe Singapore is a great place to live in. It feels like a simulation there more often than not. The reason is that, everything is so orderly mannered, right? Like, you get out of a metro, you go sit in a bus, go home. It does get monotonous for sure. It's supremely monotonous out there. It gets supremely kind of, good out there. But vacation, it's good to live there for sure. Vacation per se, I think India has a lot of great places. I do believe that Himachal is a nice place to be in India. It is a very honest thought only because of the fact that it brings a more of the rustic form, as well as a lot more these higher mountains, which you'll obviously find a lot of snow peaks in. I do believe Himachal is to be it.
Yeah, I think my favorite destination probably in Himachal would be Rishikesh. Sure. Not essentially in Himachal, in Uttarakhand, so I should say, but yeah, I mean just in the lap of mountains.
For sure, yeah, it's a beautiful place for sure.
Yeah. Indeed. I think that's about it. It was superb talking to you. I think Shreyans, amazing conversation. Got to learn a lot from your journey as well as your knowledge about the industry. It's commendable. Thank you so much for joining us today, Shreyans. It's a pleasure having you here.
Pleasure is all mine. Happy to connect and chat with whoever is interested in this particular kind of topic or conversation to have with.